Hey, Tom here, FlipAnythingUSA. Man, I've been busy all day working, and got 3 houses going right now. 3 of them been painted on the exteriors, and today, hopefully, the drywallers showed up, and just doing some patchwork, gonna blow some texture, and those will also be ready. I was gonna talk about economic uncertainty. Something triggered me talking about it or thinking about it this morning. When you've got a business, you've got to have certainty. It's like there's a write-off. I can't remember. It's like provision 179. Some of you business guys would know what I'm talking about. But what it does is it allows for accelerated write-offs. So if I have a heavy equipment company, maybe I can buy $500,000 worth of equipment or buy $1 million or whatever. In other words, I can buy up to, say, I can write up to maybe I can write off $500,000 in 1 year, and so instead of having to take it, got this write-off. And this is a horrible game that Democrats and Republicans play with, that really strangles business, because they're sitting there, they want to take action, but they're waiting to know if they can do this or not, because maybe they'll hire a couple more guys. Maybe they'll stick their neck out and they'll go borrow $1 million because they can take advantage of that accelerated write-off. And when you can't do that, and that's what's happening again this year. I think this is the last year that happens, and then of course they have to have an agreement, between the two parties, which really are one party. But and then maybe they're going to let it happen or not. And at a time like this, when things are so screwed up already, it's the last thing they should do. Everything should be like cut. Just incentivize business however you can, because it's tough enough. When things are like they are right now, nobody really wants to stick their neck out. And right now, it's like the interest rate, right? You don't have any. Everybody's concerned about the Fed raising the rate even more. And I hear people, look, the only way to get a headline right now on the YouTube is say, crash worse than ever, crash, or no crash, it's a fake crash. These guys that say this shit, they don't know what they're talking about. Listen, for sure there's going to be pain. There's absolutely going to be pain. In fact, I just was going to make an offer on a property a little while ago, and I just bought a property there for $300,000 in this area, and which was a steal. That was $100,000 under market. And in fact, I can show you guys a little video of that if you want. But then this other house came up down the street, and an agent took a long time to get back with me. I was getting angry with her. In fact, I went and knocked on the door. I said, "Oh, fuck the agent. I'm going to make something happen myself," because I hate, new agents out there. Listen, I can tell you right now, if you're not going to work on the weekend, take your sign down over the weekend. It's very frustrating to see a sign on the weekend. And I've been doing this for 41 years, and it never ceases to amaze me. Listen, when somebody wants to get your house, you want to get it sold, and if I see a sign in the yard, I expect at least a text back, or I'll see you Monday, or something like that. I mean, as somebody that hires agents that let them sell my properties, I want them to take a call on the weekend, or I want them to at least return a text. In fact, if you'll see, I'll put my sign also on. If I have an agent that I know isn't inclined, and Murray, if you're watching, he's one of my favorite agents, but he knows. And he knows it's fine. He knows I'm all about getting the deal closed. This is one of my agents that I use, a good friend of mine as well. Hey, actually, Murray, if you're out there, you can call in too, by the way. Anybody wants to call in, 424-866-7929, 424-866-7929, and we'll talk about anything you want. Casey, call up if you want. I'd rather handle that than the chat. But this is what everybody should be concerned about, is people doing things. And listen, right now, you don't even know who to believe. I was watching to a Wells Fargo exec. Wells Fargo's had some trouble. In fact, I think the bank is selling, or they just sold off a bunch of their loans. But it was one of their economic advisors, and I'm not sure I even believe him. We're in a country that right now we're starting to feel like we can't believe anything. You can't believe what the politicians say. which is not that unusual, right? But I mean, the lies are getting bigger and more blatant. So it's very frustrating. Hey, if you just got here, please hit that subscribe button and, hang out and join in. I've been buying and selling real estate for 41 years, been very successful. I have a mentorship at FlipAnythingUSA.com. Let me see if I can show you a picture of that. Let me see here. Hang on. Yeah, FlipAnything USA. So if you can, go to FlipAnything USA and take a look at, and you guys can tell I'm not real slick at this because I'm an investor more than a YouTube salesman. So anyhow, but you can go in here to FlipAnythingUSA.com and take a look at the mentorship. Go down here and look at these people that have made money. Really proud of my students. I got students that are millionaires. Since they got into the mentorship, they become millionaires, making anywhere from, this guy here, he's done, it says 500,000. If you see this right here, this guy's made 500,000 right here, but really that's then. Now he's made more like $1 million, like a little over $1 million between two buildings. And other great guys, anybody, 100 grand, 500 grand, 800,000, 700,000, a couple million. And here's the deal: when you join the mentorship, guess what? You're going to be in class with these guys. And they're fantastic, and it's very motivating. When you see people going to the class same time you do, and all of a sudden they're a millionaire and you're not, you realize, hey, this really is possible. This really is. You watch somebody become a millionaire before your eyes. And it's not like watching somebody win the lottery. You just realize these guys are doing the right thing and that it will be your turn. It will be your turn as long as you do the right things and, have a good work ethic. Okay. In fact, somebody was writing here earlier, one of them says, hey, if you're so rich, man, why don't you, why are you going to charge more? And listen, look, I'm a nice guy and I like helping people that want to be helped, but I don't give a damn about anybody that doesn't want to work, that doesn't want to help. I don't give money out at the corner. I don't help people that are standing in the streets. When they can stand out and weather the sun all day, but they can't grab a broom or go work. People gotta, sometimes they gotta hit bottom before they get up, and they're never gonna hit bottom if people keep handing them money and bailing them out. So, anyways, and as you guys know, I don't have many YouTuber friends in real estate because so many of them are fake. I don't even know who to talk to. I mean, I couldn't collab with anybody because I don't really believe most of them have the expertise that they claim to have. And then all of a sudden you kind of see them segue into, anything but real estate, which is probably a good idea for a lot of them. But anyways, so look, we'll get into whatever you guys want. Somebody give a call, would you? Bye.
Stop and listen. Time is on a mission to eliminate all the snake oil and the fake gurus that fake y'all. He'll show you how to build an empire, starting with nothing but a desire. All you really need is a good mentor, not a used car bullshit. With time, you'll learn to crush it. Investing like Warren Buffett. With real estate, you cannot procrastinate. Everyone who hesitates is left at the starting gate. Hey, yo, so don't delay and join today. The mentorship and flip anything. USA, go.
All right, so yeah, I'm encouraging people to call. I'm getting questions here over on the right here. But listen, I'm trying to do a call-in show. I can't text you guys and write back to you. I guess I can talk about a little bit. Bigger Pockets is an amazing source of reliable info in real estate. I would beg to differ. I actually watched a Bigger podcast seminar or something. I wasn't very impressed, to be honest. I think they're kind of like and I'm not saying everything's bad by any means, but you got some people that know what they're doing there, and some people that don't. It's kind of like a library. I mean, to me, it's like a library. There's good books and there's bad. So I would disagree with you. But why don't you call me up and let's talk about it. Amica Gabo, did I say your name right? Amica Gabo? Anyways, give me a call. Anyways, anybody want to talk about anything, just call up, and hopefully this thing's working. Now I'm starting to wonder if it's even working. Oh, you know what? Gosh, I got a call from Shanghai, China. Oh, well. I just realized, I should be good. I don't know. Anyways. All right, well, look, we can talk about something else. Oh, here we go. Somebody's calling in. Great. Hello?
Hello. Hey, what's up, man?
Hey, good. Sorry, I got my audio visual screwed up as usual. What's up?
Hey, I'm
Oh, it's Amika. You know what? Here, let me fix this. Let me fix my audio real quick here. We have a call, folks. Really, bear with me a second. Okay. Keep talking, Amika, would you?
Oh, yeah, no problem. Yeah, it's just my Native American name. I know a lot of people can't really pronounce it that well. But, what's up, man? Never spoken before. Just
Yeah.
give a call. Nobody else is calling.
Yeah. And of course, it would help. You know, I said, give me 1 second.
Yeah, I'm going to be getting into wholesale. I don't know much about wholesale real estate. But that's kind of the avenue I'll be jumping into just to kind of get my feet wet. I've been in final expense life insurance for about a year or two. And I want to switch over to real estate. I don't really have a lot of capital, though. So I was thinking of, wholesale real estate would be a good way for me to get in the door and build up some capital. What do you think of that?
Well, what does wholesale real estate mean to you? Because I mean, people have different ideas of what that means. I mean, I just call it assigning contracts. I have a chapter in my book. You have my book? Do you have my book?
I do not have your book.
Dude, start with that. That's $10. I mean, $20. I think you can return it if you don't like it. I guarantee it. It's worth more than most of the courses out there. But so look, we didn't call it wholesaling. In fact, like most everything I know about real estate, I just learned it firsthand. And that came in the form of finding a building that I couldn't afford to buy by myself. And I went to buy it. I wanted to buy it, and I went to my boss because he had money. He's rich, right? I used to work for him. And he came over and he said, hey, Tommy, that's a fantastic deal. He goes, how about I give you $20,000 and I just buy it by myself? And of course, I'm like, yeah, that's a fantastic idea, John. John Brooks, he passed away, one of the finest men I've ever met. He really, really was a hell of a guy. Put a lot of people to work and helped a lot of guys start their businesses by giving them work. But anyways, so that was how I fell into it. And but there's a lot of people that, there's a lot of stuff, there's a lot of fluff making the wholesaling sound much easier than it is and much more profitable than it is. In fact, some of the guys that seem to be the leaders in it, I don't see really testimonials of people making any money at it other than maybe getting a referral check. And we're actually the host of the show, or whatever you want to call the program, is giving $10,000 to a student and taking over his deal. And not that that's a bad thing. I get tempted to take over deals from some of my own students. But really, I like to help people just close the deal, make the deal. But so how old are you, did you say?
I'm 24, and I wasn't really thinking about doing it like long term. I was more so thinking short term to kind of build up capital to then go into buy and hold.
Yeah, well, listen, yeah, it's fine. Listen, get the book for starters, and because it's not, the way I invest, most people have a total misconception about what real estate investing is. And when then they go to get in, and believe me, it's not all the same. And when in fact somebody says, oh, I'd get your book, but I've already read 4, and they assume that because they read 4 books, they know what's in mine. And, it's silly. A lot of stuff is, mine's all experience, and I've been there, done that, shown it through. But you sound like you're just making the assumption that you can make money on it and buy and hold. And that's fine, but here's the deal. You want to buy it. You want to close the deal. That's where the money is in closing the deal. Now, you can go to buy something, and maybe it's beyond your means. And maybe you have to take a partner, or maybe you have to get a hard money lender, or you got to do what you got to do. And then as a last resort, you wholesale. Wholesaling to me is a last resort. I buy stuff to close it. If something was out of my means to buy, then of course I look for a partner. And that's how I fell into my very first deal, like I just described. I wanted to buy it. I couldn't buy it. I needed a partner. I went and found a partner. Found a partner. The partner said, I don't want a partner. He goes, I'll just give you cash. But he gave me enough cash that it was worthwhile for me to walk away. And, it's really tough right now because property is sitting on the market. In fact, the agent I just talked to a little while ago on a house I called on, the agent, she said, man, everything is just sitting. She said it's backing up. In other words, the inventory is growing. And, she goes, I've been doing this a long time. I've been doing it 18 years. I said, yeah, I know. I've been doing it twice that, more. And I said it's going to, probably. I said maybe your seller ought to be aware of that. Did you tell her? Because in other words, I'm trying to buy it for less. They're asking $460 for a fixer upper. That, in all honesty, is probably full market would be maybe $390, and I would only probably pay $310. And that's, of course, that's what I'm looking for. I'm not going to get that deal probably, but I'm not sure if I answered your question.
Yeah. No, you're good. The market is in such a weird place right now. I feel like we're kind of just waiting for something to happen. I'm obviously I'm a life insurance agent, so I'm in sales, but I'm going to be transitioning into real estate. So I don't know, if you have any beginner tips like that, but what I was going to say was
Well, here's what you're going to find. It's easy to make money in good times. It's easy. It's easy. As an investor, you buy something, it goes up in value because the market's hot, and that's why you're going to see a lot of these guys that think they know what they're doing are going to start to crash. I think some guys have already, one particular guy's created a fund. I think he's, I wondered why the hell he was even bothering. He had a good thing going, and I think he's going to regret it. And, but see, everybody's an expert in good times because, everything's going up. Everything they touch seems to turn to gold. But when things get tough...
Hey, your microphone dimmed down a little bit.
All right.
Yep, there you go.
Yeah, it could be the connection. We're kind of roughing it here, the way this phone is. Hey, in the audience, you guys can hear him, right? I think somebody complained otherwise. Hey, Dana, glad you're here. Dana, let me know if you guys hear us out there in YouTube land, including Amika. No, yeah, Amica, yeah. So, look, I think you're doing the right thing by just being interested, number one, but read a couple of books, right? Read my book, first of all, and then, and read anything, or, watch. But listen, whatever you listen to or whoever you listen to, make sure that they have a reputation, a proven record of actually making money. Otherwise, you might be listening to a car salesman, that just changed jobs, and now he's selling real estate courses, because really that's kind of what's out there. And but I just did a video on Gloria. She's actually one of my students, and she's going full time into, she rents a nice little space from me. She's going to close that up. Yeah, I know, Barry. Anyways, she's going to close that up, and she's going full time real estate, and she's actually going to work for a broker that I introduced her to. And I think that's a great way to go. Listen, if you can immerse yourself into it, great. If you can make a living, and if you're going to get into real estate, I'll tell you now, go get your license and then get into real estate, but don't miss this opportunity. Be a leasing agent, because sales are going to slow. Not that you still can't make money, but sales are going to slow. And maybe because you're a good salesman, if you're a good life insurance salesman, if you're good at sales, you're good at sales. I tell people that are serving me a drink at the bar, if they're smart and bright, and I say, hey, listen, you should be selling real estate. It's just like selling this drink, except it's a hell of a lot better commission than, over the tips. And same for you. If you're going to get into real estate, if you can immerse yourself into that, that's fantastic. But the other thing is like I told Gloria, I said, look, you focus on commercial real estate, and then you get 4% commission on a lease. So like I have somebody that just signed a lease that was worth $1 million. I just signed this lease. They pay me like $330,000 a year. So take that times 5, we got $1,650,000. So I would have paid a $60,000 lease commission on that. Now that's a big one, but there's plenty of other leases that are just for 2 years that are worth $100,000. You would get a $4,000 check from me, a 4% commission. And what's nice about these kind of commissions is they're not going to fall out. You know what I mean? They're more sure than say a house sale or something like that. In other words, when you're a businessman, you go up, you find a place you want to rent, you go, okay, this is in the right neighborhood, the square footage is good, bam. No emotion, you know what I mean? They don't get all caught up in, the garage and the schools and all that sort of thing. It's more practical, like, where is this in relation to where my employees are? Can they get here and do what they got to do? So that's one thing I would suggest right off the bat is look at leasing, because it's quicker, faster money. and you're going to be around guys that are smarter than most. You know, guys that wheel and deal in buildings and stuff like that.
Yeah, that's an interesting option about lease commissions. I never even really thought about that. With like super high interest rates now, are you familiar with like subject to or owner financing?
You know, listen, everybody grabs hold of like subject to. Subject to is a pain in the ass. Okay, I mean, that's for people that are broke and with struggling, and then there's not much meat on the bone. I don't like it. I mean, I think it's way too much work. You don't need to have to do that much work. But again, it's this gimmicky shit that people like to push. I saw something being pushed the other day. What was it? Oh my God. It was some horse shit, just to be honest. Listen, the real estate.
It's just for clicks.
Yeah, well, it's for clicks, but it's also to get people to pay them to learn about something that's not very relevant. And listen, the money is in buying and selling, okay? And when you, I mean, it's very simple, right? It's almost too simple. Everything, and this is the beauty of real estate in general, by the way, is that all this real estate. Okay, look at this behind me. I got the USA behind me, right, on YouTube right now. Okay, when you're in business, the main thing you have to have is you have to have customers and you have to have inventory. Right behind me is the USA, okay? This is a never-ending supply of inventory, and it's a never-ending supply of customers. There's a new person born every minute, and there's somebody dying every minute, which means their real estate is going to be sold. And so it's a fantastic replenishing resource. And, you know, and so it's pretty safe. And there's in good times and bad times, and I don't know your insurance business at all. I don't know how that, I mean, I know some guys are pretty wealthy, they're insurance guys. But again, what I do know about real estate is that as long as you work your ass off, it doesn't matter in good times or bad times, as long as you got a good, strong work ethic, you're going to survive. And because that's why I was starting to say earlier on, everybody's an expert in good times. Well, all of a sudden, you know, it's not as easy as just buying and waiting for the market to go up. Now you actually have to really know what you're doing. You have to anticipate the market going down and still having enough margin there that you can buy something as it's going down and you can resell it, and you know you've got that hedge that you know that you bought it far enough under market. And a lot of people don't do that.
Yeah, I think my biggest problem right now is just there's so much information out there. I've been consuming content for so long.
Yeah, look, get my book. I'll personally write you a check back. Yeah, go ahead.
Sorry, I didn't want to cut you off. I was just saying there's just so many different avenues you can take to make money, and I'm dumbfounded on just to pick one. I mean, I was going to focus on the wholesale, but you know, I don't know if I should just laser focus on one, but there's just so many ways to.
Okay, how long have you been watching my station? How long have you been watching my channel?
I think I just found you recently, but I've been watching a bunch of other people.
Okay, so this is what I want you to do. You found me, okay? Go look at my testimonials, okay? Really, this is probably the only way is references. You look for references. I tell people all the time, you know, I do a lot of remodeling. You know, I'm a general contractor. I've done a lot of stuff. And people say, well, how do you know who to use? I said, well, I know what I'm doing. That's huge, okay? Okay, so... And when you don't know what you're doing, and you fall in that category, you don't know what you're doing, you're young, you're learning, and there's nothing wrong with that. So what does that mean for you? You have to do your due diligence and check references, okay? So the way you check references with me is look at my content. I walk you through, you know, tens of millions of dollars of real estate that I own and rent and manage and operate. I've been buying deals with witnesses everywhere, and selling property and making a lot of money right on my show. Okay, now I have testimonials of people that are in my mentorship and that read the book. You know, showing a check for $25,000 or $100,000 or $707,000 was the last check that I showed, and I had a guy after that made $800,000. And guess what? Some of these guys aren't much older than you, and These are the equivalent of getting references. When I say, how do you know if you don't know how to build, if you don't know good quality, if you're not you haven't been immersed in construction like I've been for years, it's very difficult to pick a good tile guy, a good cabinet maker, because you just don't have, you don't know how to read a tape. Maybe you don't, a lot of people are pretty green. So if you don't know what quality is, you have to rely on references and other people. And that's what I'm saying. You're kind of there. You know what I mean? I can listen to somebody talk on YouTube, and I know instantly that this guy's full of shit, and he doesn't know what he's doing, and he's just like he's selling cars maybe last week, and now 10 years ago, and now he's been selling real estate courses for 10 years. I can see right through it, just like you could. I couldn't talk about insurance intelligently with you. You'd see right through me, right? Well, that's me. I see. So what you have to do is you rely on references. So go back and watch the people that you've been watching and look for what I just told you to look for at me. Look for references, look for testimonials, look for people that have actually made money doing the stuff. And then do the math. Do you want to be a millionaire or do you want to be a thousandaire? Okay? Because that's what you're talking about. Anyways, appreciate you hanging out. I'm going to take this next call if I can. Say again?
I said I appreciate you talking to me a lot, man. It means a lot.
Yeah. Hey, man. Hit that subscribe button and come back. Listen, there's nothing worse than a young guy like you getting ripped off of his seed capital and getting set behind. And that's what I don't want to happen to anybody. And like I say, you'll learn more about me as we go, but I'm certainly not interested in your money as much as I am concerned about your success. So let me take this next call, and thanks a lot, buddy. Yep.
Well, appreciate it, man.
Thank you. All right. Who else do we got here?
Hey, Tom. This is Aaron, the guy that talked to you last week, Tuesday, or whenever the last call was.
Oh, okay. I apologize. I don't remember exactly what we talked about. But
No, that's fine. No, I was just calling. I really love talking to you. You're kind of one of the few mentors that I see on YouTube that is the real deal.
Yeah.
To kind of follow up with what you're talking about. I guess the more I educate myself too, that's something I've noticed is that you start to see through a lot of the BS, and you start to see who really is doing the deals and who's really trying to sell you on a product and who's really trying to sell you on that financial freedom.
Yeah, listen, it's real easy to take advantage of people. It's very easy. It's not hard at all. Tell people what they want to hear. And I don't tell people what they want to hear. I just try to tell people what they need to know.
Brutal honesty?
Yeah, listen, I got to live with myself. And let's see. I think I got you on Bluetooth now. Everybody else is going to hear better now. Are you there?
Yeah, yep. I can hear a lot better too.
Okay, good. And everybody else on YouTube can too. Sorry about that. Anyways, yeah, hey, Chris Parker, if you're out there, I got to get one of my students, he's local, I got to get him to come on here and help me too. He also knows quite a bit about Airbnb, and he'd be a good source for people on that too. Okay, so go ahead. What was your question?
So I guess what I was going to ask you about is I've more of been in the multifamily, like real estate realm. That's been most of my investing career.
Yeah,
about the past 4 years.
How old are you? Oh, right. Yeah, I remember you now. I remember. You kind of got yourself in a not so good a deal that you're going to go back to Section 8. You were trying to do a conversion of some sort.
Yep. Yeah, I got myself in a little bit of a bind, but at the end of the day, we'll still come out of it. We won't lose money, at the end of the day. And actually, if we hold it for a year or two with cash flow inflation, on rents going up, because in Section 8, they've been matching those inflation rates for how much they'll subsidize. So that's actually been beneficial for us.
Yeah, I think you're right. When you told me the situation, I was with you. Yeah, just get back into Section 8 because that's what you got. You got a Section 8 building, and they're not paying the rent. Somebody else is.
Offload it.
Yeah.
Yep, and offload it as quickly as I can. But I was going to ask you because I like I said, I polished off your book and I was reading through, and a lot of the stuff you focus on in there is like know your value. And specifically, the stuff that you talk about is very much in, hey, know how to identify property, specifically single-family housing. What do you do when you get into?
Yeah, I want to back up. No, it's not. I don't listen. Okay, well, let me just say this. I appreciate you.
Because I guess my question was, I guess my question was more of how do you translate that evaluation into commercial and more of your multifamily and commercial space?
Okay, so this
knowing value.
Okay, so I appreciate it, and I know you read the book, but I guess I concentrated on a little bit more on houses. Here's the deal: houses. There's more houses than anything else on earth. Okay, is houses. There's more of those than anything, and so that's why. I'm always looking for commercial, industrial. I've owned, apartment buildings, made millions of dollars on apartment buildings. And as you become a more sophisticated investor, you'll be able to look at a broader swath of properties. In other words, I could buy a duplex if I wanted to. I could buy a house. You know what I mean? It doesn't take very long for me to calculate. Oh, that's a deal. That's a deal. That's a deal. And that kind of comes with time. And so even while I'm always trying to find buildings, because I want to spend a couple $1 million minimum at a time. But what happens is a house comes up that I can steal. A house comes up. I say steal, not steal. Get a great deal on. Okay, I don't want to say steal. I just bought, just give you an example. I'm just going to reflect back here on what I bought recently. I got to think about it for a second. I think the last building I bought a $1.6 million industrial building. I bought a $2.8 million commercial building, and there's probably roughly $1.2 million profit, equity new equity that's profit on the commercial building, and there's probably $800,000 on the industrial building. Okay, so one of them I leveraged in with I paid cash, but in the end I leveraged with $400,000. So on $400,000, I got almost a 25% return, making about $99,000 a year on $400,000. Then, and it's probably pretty close to the 2.8 million too, pro rata. But now let's talk about what else I bought.
So your down payment, just to clarify, your down payment was $400K. You paid 1.6. You think it's worth 2.8 today. So you've got
No, 2.4. No. Let me back up. No, the numbers are on that. As I said, I made 800. I got 800 equity, and I'll explain it to you real quick. I got 9.25. Okay. I got a 9.25 cap on, and if you got a calculator, you can do it. I just kind of half have it in my head right now. But on 1.6 million, I paid 1.6 cash. Okay, because I had cash, and I was rolling cash from 3 houses. On 3 houses, I made that $1.6 million basically on 3 houses that I bought maybe 10 years earlier. So I rolled 3 houses that I paid maybe $500,000 for, and sold them for about $1.6 million, and paid cash. And that on that $1.6 million, I now had $144,000 a year coming in. But I don't like having all my cash tied up in one building, so I got a RLOC, a revolving line of credit, and I pulled out 3/4 of the money I just spent. So I pulled out $1.2 million. So now I have $400. Okay. Yeah. So now I have $400,000 invested in that $1.6 million. On that $1.6 million, like I told you in the beginning, when it was paid for cash, I had $144,000. But now I'm paying $44,000 a year interest, which is about 4% interest on that $1.2 million. Now my income is reduced to $99,000 a year. So I'm getting $99,000 a year on my $400,000. It makes sense. You follow me now. You follow the math. Yep. If you do, then I assume everybody else does.
Yep. So the amount of money that you have in the deal, cash in the deal, you're making a 25% cash on cash return.
Yeah, and I would have bought that building. With a bank for $400,000 down if I hadn't had cash. But I had cash, and I just kind of reversed it, right? Okay, so now, so there's that, and so now when you take that, the income from that, you'll get on a 6 cap. The building's worth a little over $2.4 million. And that's what people will pay. I can get a 6 cap. Probably even right now I could still get a 6 cap for it, even though money's getting more expensive because there's a lot of foolish people out there. But the dumb money is starting to dry up. Thank God. I'm glad because I want it to dry up. Because I don't like competing with dumb money. It's horrible, But
then the deals actually start becoming deals again. You're not looking at stupid stuff that can't cash flow.
Exactly. So I'm looking forward to what's coming. And but okay, so you follow me on that. I'm trying to keep with the question. Oh yeah. So here's the question. So you can see on that what the return is on my investment, but also I got $800,000 equity. So I could just turn it and get $800,000, but I would have to defer because I'm going to get killed on taxes again if I don't. But my point is in my situation, it kind of makes sense to buy and hold with all this deferred real estate, deferred gains. Now, for flipping though, go back to flipping now. I've bought a house for $300,000. I bought another one for $320,000. Actually, I bought 4 houses. I paid $300,000, $320,000, $300,000, and $460,000. So what is that? That's $920,000 plus $460,000. Sounds like $13,800. So I spent
$13,800.
Yeah. So just say $1.4 million. So I paid $1.4 million for 4 houses in the same, within the same time, roughly span of a year that I bought those other 2 buildings and this. And on those 2 buildings, I made roughly in equity, I made $2 million. But on the houses in equity right now, because I haven't really realized a gain on it, in equity on the houses, I've got about, I spent 1.4, and just say roughly conservatively, there's about 100, conservatively there's 120,000 to 150. We'll just say 140 times 3. Okay, so that's 420, right? 420 on those 3 houses, and then on the house I paid 460. There's probably considerably more. Potentially, I'm just going to say there's 4. So there's 700. So basically, I made the same on those houses as I did on the industrial building in equity, right? Roughly 800,000 is there in equity. You follow the math?
And you
on that?
only spent 1.4.
Yeah, but it's not that it's
as opposed to the 1.6.
Yeah, well, but also I did 4 transactions. Okay, I would rather do 1 transaction and make 100,000 less than 4 transactions and make 100,000 more. But my point is this: I made 4 really good deals on houses in the same time that I made 1 really good deal on industrial and 1 really good deal on commercial. And to be honest, that's probably about the story of my life. I'm always looking for those industrial and commercial buildings, but it's easier to find deals on houses. And so that's why I do a 4-to-1 ratio. All right, in this case, I did a 4-to-1 ratio. I mean, if you count 4-to-1 on industrial, 4-to-1 on commercial, which is, I would say, is about fair. That I actually hadn't bought an industrial property before that one for a little while, but commercial I bought quite a few of. Anyways, I'm just trying to share the math with you guys that are curious. I mean, I got nothing to lose by sharing with you. Go ahead.
When you like evaluate a building, because obviously like you're looking at comparables, like, okay, like if I can get a cap rate, if I can sell it, cap rates are going for 6 or 7, like there's a little more science to it because you're dealing with a more educated investor when you're talking commercial spaces. But what do you do to determine like the rent rates on the back end? Like, okay, I know I can rent this for $5 a square foot or $10 a square foot. Or like,
it's just math.
How do you determine that?
It's all pretty simple. I mean, as long as I know what I can rent it for, then I know what I'm willing to pay. As long as I know what I can sell it for, then I know what I'm willing to pay. And, and they're all tied together. I mean, you got to have a decent cap rate in order to get a decent return. I mean, you're not going to, investors buy buildings based on cap rate. Houses, they don't care. It's like, people buy how much a month. I just want to live near my mom, or I want to live near this school, or I want my kids to go to this school. And I can understand and relate to all that stuff. You want a safe neighborhood and all that sort of thing. And so the beauty, each has its own beauty. Okay, the beauty of houses is they can go up a lot in value in a very short time because the only thing stopping somebody from buying it is their paycheck. They'll pay whatever they got to pay, whatever they can afford. They don't care about how much. They care about how much a month. That's the beauty of houses. People will pay. The sky's the limit. Whatever they can afford, they'll pay. And then, but within industrial, commercial, and multifamily apartments, the rules are simple. What is my return? Okay, that, and then you look at what you can get for rents, and you're going to look at what you got to pay for it, and then you're going to do the math, and you're going to know your cap rate, and then it's, if you're getting it under market, if the rents are under market, you can raise the rents and you can create value. That's on that property I bought that I just referenced, the commercial. I raised in a year, I think it's somewhere between 60 and 80,000. I've already got the rents up in 1 year's time. They were under market, and the leases were all coming due for renewal. So I was able to renew every single lease. Maybe I got 2 I still need to renew, but 90% of it, I got released. And this is the other thing. This is also, I tell people, you got to prepare for the crash. Always prepare for the crash. You got to have a hedge, and like you kind of got it with your apartments. You change gears and went back to your hedge, which to me is Section 8. Keep the money coming in. Mm-hmm. And my hedge, I've had when things really, really get rough, I anticipate property values going down. Property values going down. I'll be renegotiating with the counties about getting my taxes down, and that we're already there. Whether they realize it or not, I don't know. I got another fight tomorrow, but you've got to do what you can. Just got to do your due diligence and watch stuff. So what else? What else are you thinking about right now? You become a long-term. A hodler, they call it, right? You're hodling with your new building right now. And that's what happens when you have to. I laugh at people calling it hodling. Yeah. I said, that's another way of saying I screwed up. So, not that you did, but.
Yeah. I mean, for being 29, having a 30 unit, to get to that building, it was a little bit of growth that I did not expect or foresee it to go that fast.
Dude, you're 29 years old and you already got 29, you already got 30 units. You're way ahead of the game, man. You're doing fantastic. Just keep going at it.
I guess the thing I struggle with is having exposure, because I'm an engineer by trade. So having exposure to the knowing my market, knowing I feel like if I actually was able to find something more of like an analyst role or something like commercial realty, I feel like what I've gleaned in the 4 years I've been doing real estate investing, I could have it's like rocket fuel. You're just like, oh man, I can learn so much, because it's hard for me to know okay, how much, what's commercial property going to be in this area? What's it going to rent for here? What determines that? For for multifamily, I got into that and I started to kind of research that, but it took a long time to know value for that.
Yeah. And engineers, you guys are fantastically disciplined. Anybody that can go become an engineer is a very disciplined person. By the way, I got Peter, who's been in the class here, I think for about a month here. He just wrote, meaning you. He goes, the guy with 30 units needs to join the mentorship. And believe me, we have a lot of people that are very successful in the mentorship. And but anyways, certainly consider it. You'd be a good fit.
I'm strongly considering it.
Yeah, you'd be a good fit because you're among peers. Believe me, so that's what you want. So I would just tell anybody watching, you don't have to be. Common sense is the key, and you were the guy that just called. I forget which one, but talked about. It was you. I know immediately that this guy read the book just by the few things that he said, and anybody that's in the class. I know very quickly if somebody hasn't read the book or they slept through a lesson or something. I don't know. And so everybody is pretty much, there's no handhold, and everybody does the work. And, and that's why I've been selective, and that's why it's paid off so well. And we got such fantastic success in the mentorship. And believe me now, the people that you're among in the class is a big part of what's the value, to be quite honest, is we just got a very good group. And, in fact, and I'm available. I'm always available. I got texts today from several students today on different things, and some have problems, some of them have good things going, some of them have concerns, and we just figure it out. But what else you got? Anything?
I guess one other question is: have you ever done small town investments? I've looked at a few in Iowa. And so I look for towns that are growing, but it's really difficult to evaluate a property of any type in a small town because of just how low volume there is, sales.
Yeah, I mean,
I don't know.
here's the deal. There's different opportunities. You can go into a small town where the values are depressed in general, but you go up and you're buying, you can buy up properties that, that you're getting, just buying an average deal in that town, you're getting your rents double the mortgage. You follow me? In other words, the values are down.
Like cap rates are like 15-20% if you find the right deal.
Yeah, and
It's
because
just your cash flow is crazy.
yeah, and that's the way it works. Is the cheaper the property is, the better it cash flows, the better cap rate it is, and then it's like you don't get twice as much rent for a $200,000 home as you do a 100. And then when you get up to 3, it's diminishing returns. As you climb up, the returns go down. It's just how it works, because people have a limit to how much rent they can pay. But on the low end, like I say, if you're talking about Section 8 or in general, they don't care. They pay the rent everywhere, and it's not the same rate everywhere. But again, there's bigger margins on properties under $100,000. I teach it in the class all the time. You can double your money much easier on deals under $100,000 than you can over $100,000. And I've done, fantastic. I mean, I bought properties for 5 times what I paid for them, or sold them for 5 times what I paid for them. So that stuff can happen. But I'm just saying it's really easy to double and triple your money on deals under $100,000. And if you're having to be in a small town like that, I mean, you can really. And I got somebody actually, I think, just joined today that is in exactly that kind of situation. I said, oh yeah, you're going to clean up. In fact, yeah, it's funny. I have to laugh. He's actually somebody that was in a Chris Cronin class. Go ahead.
I was going to say, because the town I lived in had about 200,000 people in the metro area, but there was stuff that I was finding in small bedroom towns around where I could go buy, like, I bought a 6-plex a couple of years ago for like $85K because it was half vacant. Mm-hmm. And so I just turned the units, and then I was able to bring in like over $2,400 a month in rent.
Yeah.
So it's not a lot, but that was just kind of the like.
Did you flip it?
Oh, sorry.
Did you keep it or sell it?
I haven't sold it.
Oh, okay.
I held on to it.
Right.
I probably should have sold it here, like in the past like couple of months with how crazy everything was. But yeah, that was one I mean, look, that's fine. You're going to learn. I mean, I got plenty of great hindsight, and I can tell you there's a lot of properties I wish I would have just flipped. I got one I made $2.5 million on. I should have sold it early on and made like $700,000 or $800,000 because I would have had that 20 years ago, and that money would have gone a lot further than $2 million does today, or $2.5 million. I mean, I still made a lot of money. In fact, that asset I paid $205,000 for this property, and then I bought something. Then I bought the property next to it for $125,000. So I guess I had basically $330,000 in it. But then I could have flipped it way early for like $700-800 when I just had the one piece for $200. Well, I thought, you know what, it was a fantastic deal. But I thought, you know what, I'll teach my kids how to build. I have 4 kids. I thought, I'm going to teach my boys how to build. I thought they'd be like me and be in construction. And I got that wrong. They don't have an interest in that. And so I sold the property, and I made I sold for 2.8. So I made $2.5 million on it. But I held it longer than I needed to. And then and then I took that $2.5 million, and now that's worth about $7 million in the buildings that I bought. So you if you turn it, as long as you turn it and keep buying, it's like
up and better.
Cost, because
yeah.
Yep, because you can take that and snowball it, because then you're like looking for that next deal that's going to be able to add. You're going to be able to find and add value. So once you've added the value.
Yeah, I mean the easiest way to look at it is this: if you got $10,000 and you're getting 20% on it, okay, but the property's worth twice what you paid for it. You can make $10,000 now, or you can make $2,000 a year. It'll take you 5 years to get your $10,000 back, when really you made it overnight. So you have to keep flipping. And buying and holding is a pleasure, is a privilege that you get for hard work, and it's for people that have already succeeded. You flip until you get there. But anyways,
thanks for the time. Appreciate it.
Yep. Hey, I appreciate you calling. Somebody else just called in too. I'll take this next call. And hey, I appreciate calling and get that book, or you've got the book, but consider the mentorship. Fill out the mentorship survey, and we'll have a talk. Thanks a lot, buddy. Aaron.
Okay.
See you, Aaron.
Yep. Take care.
Yep.
Bye.
All right. I think I got the next caller. Yeah. Who do I got here?
Hey, what's up, buddy? I just wanted a quick question because I read your book like 4 times. There's this, it's just so hard. Like now I'm staying in Florida for the past couple of years. And there was 2 deals in my area, Tom, that I missed on, but for me to find deals, I would have to venture out like an hour and a half, 2 hours away because it's so expensive here.
Okay. Now you said you missed 3 deals. Were those in your area?
Yeah, those were in my area. But this was a while back. It was just being hesitant and scared more than anything else.
Sure. I mean, here's the deal. Fear is uncertainty. And when you're fearful, it's because you don't know. And so...
No. The thing is, Tom, it was a certain deal. It's just the unknown of never having bought before. That's what the fear was. It wasn't a deal. It was just the unknown of never having purchased anything before. And it's like, wow. It was just that, you know what I mean? Because it was definitely a deal.
What's your name?
Mel.
Mel? Okay.
Yeah, and I wanted to ask you just a quick question. If the numbers worked out of state on a multifamily deal or half commercial, half multifamily, would you go for it, or do you just like
in your shoes? I would not buy anything out of state at all. No, and you don't have to go out of state. That's bullshit. You don't have to go out of state. The money's right there. It's in your neighborhood. It ain't very far away. I promise you.
Right.
Yeah, I'm telling you. I've bought the property I'm in. I bought the property next door to this one. I bought one. I could throw a rock and hit another one, and then I could throw a rock from there and hit another one. I could probably go about 2 miles throwing a rock and hitting a piece of property that I own from here, where I'm at right now, and then go down a corridor, hit my next barbell. If you watch me long enough, you know what that means. And again, I could throw a rock and I could keep bouncing them off one property after another because that's how close everything is to each other. You don't have to go. It's a misconception. I guarantee you, everything is nearby. Everything is nearby.
Okay.
Okay. Yeah, and if you don't have my book, get my book. But
No. I read your book.
Oh, you said 4 times.
I have
I'm
your
sorry.
book. I read your book.
Yeah, listen, that fear. I'm telling you, this is. You are probably, and this is not a big, but this is the kind of guy that I want. You on the phone. You're the kind of guy that I want. Because you sound like you're fairly established, right? You've made some money in a job or whatever you've done?
Just have some savings, yeah.
Yeah, okay. So, but you're interested and you're taking time. You read my book 4 times. I mean, that shows some discipline. But being interested, number one, and the scare factor is probably that you don't have a mentor for one thing, but you don't have, you're not surrounded by like kind people, right? You don't have a lot of people doing exactly what you want to do, or do you?
No, definitely not. That's absolutely not.
See, here's the deal, and this is one of the beauties of the mentorship, is when you get in that mentorship, you're going to be sitting down with you're going to have people at the table that were just like you, that now have a 3rd property or a 4th property and have made hundreds of thousands of dollars since they've been in the mentorship in the last year or 2. Now, not everybody, it's not everybody's story, but everybody gets the benefit of being surrounded by people that they're not lucky. And listen, you can say they're lucky to get their first deal kind of early, but when they make their 2nd and 3rd deal, that luck shit is an excuse now. You follow me? It's real. And that's what
right.
And see, this is what will give you confidence too, is, like right now, it's one thing, I show people all the time, I bought this. I do it on video. I'm showing you guys, I bought this, I bought a bunch of property in the last year. But you're going, but this guy's making, and I tell you, don't trust anybody that makes money on you. Don't trust anybody that stands to make $1 on you, agent or otherwise.
No, I know.
No, I'm just telling you, but it's unusual for the host to tell people that makes money on people, right? And I make far more money in real estate. There's not even close, my mentorship it's really just for me what I want my legacy to be. I'm 60 years old. I got all the money I'll ever need. And I enjoy helping people that are smart and driven. I don't enjoy just helping everybody, no matter how dumb they are. And that sounds crude, but I'm just telling you, a lot of people, they're lazy. They're not even dumb, they're just lazy, which makes them dumb. And I won't help anybody that's lazy. I'm not interested. I'm just not interested. But when you help somebody that's hungry and anxious, and I used to be that guy. I was a bright-eyed guy, and I'd see the guy that was rich, had nice big, trucks and, multiple trucks in a company, and, maybe I work for him, and I'd say, man, how'd you did? What did you do? And they're like, well, let me tell you. I had a guy, John Brooks. I mentioned him a lot. I was only 17 years old. He rented me a building for my cabinet shop, and and he just liked that I was hungry to know, for knowledge. And he'd say, man, you know what, Tommy? He goes, that building. He goes, he told me about the building that he bought that I was renting from. And then he tells me, he goes, I closed my company. And he goes, when I closed that company, he goes, I had over $1 million in that bank account. And that was all from business, which he was actually a really good businessman too. I can't talk about everything, but I guess where I was going with that is you will gain confidence when you see people just like you making hundreds of thousands or tens of thousands. You know what I mean? You'll gain confidence from that.
Right.
Because, and then you'll realize, and then you'll see somebody that maybe just did a deal that's eerily similar to what you have going on in your area. You follow me? Because I've got people that are, I got people in San Francisco. I got people in, high-end areas. I'm one of those. And then I've got people that are in rural areas that are killing it, making more money than most everybody else. And that is, and so you get the benefit of having a brain trust that includes people in, and I'm sitting like in front of the USA, behind me in my YouTube here, and you get the benefit of people in all these different states and even other countries. I got guys in Portugal that have made money, and some of the people in the mentorship are out of the country, and we got one Istvan. It's fun because when he's in the mentorship, the whole time he's got headphones on and he's listening, and then I'll say, hey, Istvan, what do you think? And then he'll come over, but we're watching him doing the annuals on airplanes. He's in a hangar and he's constantly fixing airplanes. So it's really fun group in general. But yeah, you should definitely, I think you should definitely consider the mentorship. You sound like mentorship material, bud. And anybody that's like, say, here you are calling in and you're digging in, and you're just lacking. You're just lacking a little bit. Fill out the mentorship survey, and we'll have a one-on-one call. But I urge you to do that. Oh, so by the way, the mentorship. Everybody that's watching, the mentorship is going up. I raised it $500, last week, and I've sold the mentorship for more than what I'm charging even right now. I am going to go up again. But fill out the mentorship survey now, and if you join within a reasonable amount of time, you can lock in that price, even if it does go up. Anyways. I think I'm going to kill it.
Thanks, Tom.
Yeah, I appreciate it. Be sure to hit that subscribe button, and hey, call back again. And like I said, fill out that mentorship survey, and I'll give you a call and we'll talk direct. And no pressure at all. I don't want anybody to ever spend their last few bucks to get in the mentorship. In fact, I tell everybody you got to have at least 10 grand, over and above whatever you pay me to get in the mentorship, which is a couple grand, because I want you to have money. I want you to succeed, and that's where we're at. So. Thank you.
Thanks.
Yep. All right. I can take another call.
Take care, Tom.
All right. You too. Thank you. If anybody else wants to call in, you can. I got somebody here that. All right. Well, if somebody wants to call in, they can. I don't think I have anybody in the queue that I can see here, but I'll go through some of the stuff that's here in the chat. You only buy out of state? No, I don't buy out of state at all. I don't believe in buying out of state. I've done it, but it really, you need to be pretty good. You need to know what you're doing. And look, there's a great video for you guys that are new. Go watch Spencer Cornelia. He's the guy that goes after fake gurus. I really like him. A nice young guy. But I did a video on Spencer Cornelia. He went and bought some real estate. He bought real estate that, out of state, and he lost his ass. To make a long story short, he lost his ass on it, but he kind of shared everything. But when he shared, I looked at it immediately. I'm going, oh shit, he did everything wrong. He hired the wrong guy. He hired people that didn't know what they were doing, and that's easy to do, to hire people that don't know what they're doing when you don't know what you're doing. Okay, and then it just gets worse and worse. I think he paid too much for his property, and then he hired people to work on it that didn't know what they're doing, and that made things even worse. And so I think I just took another caller in here. Somebody online?
Hey, Tom, this is Christian.
Christian.
Yes, can you hear me?
Yeah, yep. Christian, have we talked before, or are you in the mentorship and I don't remember at the time?
No, I'm just another person who just listened to you on YouTube.
Okay.
But, yeah.
Sure.
So, I had a couple questions for you. Yeah, I had a couple questions for you. So the problem that I'm having, so I own 3 properties, and they're all cash flowing. The problem I'm having right now is it's kind of hard for me to find a deal that cash flows because the interest rate is going up. Kind of like I know you're a flipper, but what's kind of like your strategy? Do you think we should be like holding on to more reserves now, or do you think we should just keep leveraging and buying real estate? Like, what's your take?
It's just math. I just said, and it sounds like it's simple, but it is. Math is super simple, right? It's just easy to do, add and subtract. And like you say, you've done the math. You're having a hard time making a deal, and that's because people don't want to let go of the idea that their property's not worth what it was 6 months ago. And it isn't worth what it was 6 months ago. If it's a house, there might be some room there, maybe. But if it's, the bottom line is, if it's commercial, industrial, apartments, even houses, all of it, when the interest rate goes up, when the money gets more expensive, it's got to come from somewhere. Something's got to give, and the only thing they can give is the price you pay for it. And so the value's got to drop, and they're getting driven down right now. And this is what always happens before things go down, whether it's a big crash or whether it's a little crash. And I started in a pretty big crash. Is first of all, people go into denial, and they say, the market's coming back. Oh, they can't, the government can't do that. Government does the stupidest things ever. Nobody cares. The government does the dumbest stuff. You got to remember, what influences the decisions that government make are lobbyists and money. And so everybody can be bought. So everything can be changed. Nobody does what's right. There's not enough good people in Washington, D.C. to do what's right. So you're subject to people, just personally enriching themselves, and that's what they do, and that means keeping the money coming in. And so they'll do anything. It doesn't matter if it's good or bad for the country. If it happens to be good, great, but it's not likely. But so you can't count on them doing the right thing. And so in your situation, or in my situation, what we do is it's uncertainty. When uncertainty is, you hunker down, cut your overhead, hold on to your money, stay close to your tenants, keep that cash flow coming in. You want to make sure that they're healthy, and the ones that can afford to pay, pay. And if they can't afford to pay, then maybe if you like them, you keep them. If not, then you say, you need to find something cheaper because I got to get somebody that can pay more. So you want to maximize the money you can get out of your investments. Again, I've been concentrating on getting all 5-year leases signed for the last year. And I got a lot of property, and I got nearly everything's completely wrapped up and tied up. And just because I have 5-year leases from all my tenants, that makes me feel better, but it doesn't mean that they can't go out of business. They can. So there's things like that can happen. And but yeah, you're right to, you didn't say hunker down. Those are my words, but just hold tight and just sorry, getting some noise out of you over there. You got to.
Oh, there's a neighbor doing some work on a fence.
Yeah, I understand. I can talk through it. You have to. The money's more expensive. The value's got to drop. So what happens is, I was kind of going through the steps, is people go into denial. They don't sell. Then they hold so long that some of them hold till they're upside down in their investment. And believe me, you could have bought something that had a 6 cap and your cash flow and everything's great. But now in order to sell it, and this is why I think some of these newbies that are putting funds together, they don't really know what they're doing, they're trapped. They bought a property at a low interest rate. And guess what? They can't sell it to somebody at a low interest rate. Those numbers went up. So now the only room is for their values to go down for somebody to be able to afford it. So there's a lot of people that are going to get caught in upside down investments, not just funds, but funds will definitely be a victim of all this stuff and the people that invest in them. But the, it's got to give somewhere. That's why property values go up with low interest rates. Property values go down with high interest rates. And our interest rates are going up, and they're not even high. They're not even half of what they were when I started. So there's room for them to go up a lot more.
Have you ever seen like rents go down though over time?
Oh yeah.
Like in a down economy?
Oh, absolutely. Absolutely. Yeah, I mean, when jobs dry up, people go elsewhere. People live two in a room. You know what I mean? I mean, they start doing the roommate thing. You'll see apartment buildings where when an area gets hurt and dried up, one neighbor moves in with the person that they know next door that they get along with, and then they give up their unit because it's just cheaper. It cuts their rent in half. And so, yeah, that will happen. That can happen. I mean, it doesn't mean it's going to happen to you, but nobody's immune to the fall.
Yeah, I'm more of I one of the things I look at whenever I buy something is the local economy and what the jobs look like in that area.
Yeah,
because I don't want an investment that dries up.
Yeah, I mean, this is until you got millions, it's when you hold a little bit, it can be difficult because it's just tougher to afford. It's tougher to afford. If you got a lot of property that's all paid for, where you can afford to rent it for half of what it's worth, if you needed to, you could, and you could still survive, and that's a nice, comfortable position to be in. But like I say, if you're getting 20% on a $100,000 property, that's great. But you probably had maybe $100,000 equity to get that 20%. So you might have been better off just selling it, putting the $100,000 in your pocket, paying your taxes, and having your $80,000 or whatever's left. And you know what I mean? Because that's 4 years' income. That's what you got to look at. And everybody watching too, by the way, when you got a property, even if you're getting a high return on it, you got to look at it. If you can sell it, and you're going to get 5 times what the income is over, in other words, you can sell it and have enough cash the next day after you sell it that it's 5 times what you're going to get over the next 5 years, then it's something to consider that maybe you should just be flipping because you'll build the cash up much higher and faster, quicker. But
it's kind of crazy. So I live in San Diego, and I'm from San Diego, and I can't even buy a piece of property anymore.
Nope.
I was in the Navy. I bought my home over here with a VA, but I'm making 6 digits right now, and I can't even buy anything because the interest rate took away all the buying power.
Well, it wasn't that long ago in San Diego, condos were cheap. I mean, it wasn't that long ago. I don't know how old you are, but I mean, it wasn't that very long.
$300,000, $200,000.
Yeah, well, I mean,
another 600, 500.
Yeah, I mean, they were cheap, very cheap relative to the area, and that's probably been 15 years. Time goes by so quick, but that's kind of everybody's story, by the way. Is most people that are in a home today, the home that they bought 10 years ago, they can't afford to buy the home that they're already in. And that might be your story too. You might not be able to afford to buy the house that you're sitting in.
Well, it is.
Yeah, and that's a common thing. And so the message for everybody is you better buy something. And don't listen to Grant Cardone. Sell your house, don't buy a house, sell your house. Better to rent. Shit, there's nothing further from the truth. It's a bunch of bullshit.
Yeah, I'm not a fan of Grant. So like my income actually increased I don't know, 2 or 3 times the amount, and I still can't qualify. It's so strange. But it's double, tripled my income.
Yeah, no, it's fantastic. Well, it sounds like you've done pretty good for yourself. But listen, hey, hit that subscribe button, join in, and call back in next time. And I'm going to wrap it up here. I think I've been on over an hour, and
it was nice talking, Tom.
Yeah.
Appreciate it.
Yeah, thank you. Appreciate it, Mel. It's Mel, right? No.
Christian. Yeah.
Christian, that's right, Christian, sorry. All right, man, thanks, Christian, and we'll wrap it up here.
Yep.
And thanks again for
calling. Have a good one.
All right, you too. Take care. So real quick, what everybody wrote in here, we've got value adds for commercial. Man, I think we'll save that topic for next week. iron workers in Florida. GC has $1,000 of my dollars, and I've been trying to get it resolved, but it seems like they are scamming. Yeah, sorry, iron worker. Yep. Well, hey, everybody, I appreciate you hanging out with me, and watch this, and I'll be right back.
Stop and listen. Time is on a mission to eliminate all the snake oil and the fake gurus that fake y'all. He'll show you how to build an empire, starting with nothing but a desire. All you really need is a good mentor, not a used car bullshit. With time, you'll learn to crush it. Investing like Warren Buffett. With real estate, you cannot procrastinate. Everyone who hesitates is left at the starting gate. Hey, yo, so don't delay and join today. The mentorship and flip anything. USA, go.
All right. Well, hey, I think I appreciate you guys hanging out. And listen, I also have a book, Wake Up and Smell the Real Estate. It's been a bestseller on Amazon, Audible, and Kindle. I urge you to get this book, and it's not for the $7 that I'm going to make on the book. I don't care about the $7, but you guys that are serious about making money and want to make, I mean, listen, for $10 or $20 in paperback, you know what I mean? It's better than getting taken by some fake guru for, $20,000 or $10,000 or whatever. Start cheap, and then watch the free stuff. And those of you that got a few dollars put away and you want to invest it right, you should take the mentorship. If you can afford it, you just saw the video. I got fantastic success stories in there, and you go to FlipAnythingUSA.com, which I also urge you to do. Go to FlipAnythingUSA.com and just see people that you'll identify, just like you and me, that have, they've made more money in a year, being in the mentorship for a year and making a couple of deals. They got more cash in their hands than they've been able to save in 20 years. That's a big deal. So, hey, everybody, thanks again for watching, and we'll see y'all next week or sometime soon.